Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good Monday morning. Let's get to your top stories today. Oil slumping after Israel's strikes on Iran avoided oil facilities. Meanwhile, as you see on your screens here, shares in Japan on the up while the yen is under pressure on those election results.
Yeah, David, I'm Christiaan here live outside Parliament in Tokyo. Prime Minister Shigeru Ishiba racing to shore up a weekend coalition with his job at risk after the ruling alliance's first election defeat since 2009.
And I'm Annabelle Drawlers, live at Hong Kong FinTech Week. Ahead this hour, we'll be speaking with 3Cap on the tech opportunities that they're seeing in the region. And later this morning, an interview with AlphaTrio Capital, giving their take on sustainability and impact investing.
It is a busy Monday. We are setting things up pretty cautious on this start of the trading week here, given just the risk we've seen, that LDP shock with this coalition not winning a majority over the weekend. You have that Mideast tensions, and that's why you're seeing Brent crude continuing that decline this morning. We're seeing that drop, given that, as Dave mentioned, avoiding critical infrastructure in Iran with those Israeli strikes as well. And you're watching very closely what happens to Japanese assets, right, following that LDP shock. So dollar yen is weakening to the 3-month lows against most of its peers here right now. So we're trading 153 against the dollar. You take a look at how Japanese equities are doing, though. We were expecting them to actually fall following this fallout from this election. But in fact, they actually are seeing some gains here this morning, perhaps being benefited by this weaker yen story across the board. So against major peers, there you go. Weakness across the board this morning. The oil check is certainly one to watch as well, just given what we've been seeing. So that slump in crude continues. If you take a look at what we're seeing with WTI and Brent this morning, Shanghai crude is doing something different here, but we're watching the energy space. Some of these stocks are actually slightly lower here. Citi also just coming out early this morning, cutting their 12-month oil forecast to $60 now, given the fading risks that we're seeing around the Middle East. The approach to the open looking like this in China. Obviously, we heard from the finance minister at some of these IMF meetings talking a little bit more about the need to boost consumption, right? Does that going to help the story, given the backdrop? Industrial profits slumping some 27% last month, and showing that really more stimulus is needed. One of the worst slumps we've seen since COVID, Dave.
Yeah, 27% is the second worst drop on record going back to 2012. And I think November 4 to 8 will be the crucial date, that window during the Standing Committee meeting. So more on that in a moment. The other big story, as Yvonne was alluding to earlier on, this shocker of a result over in Japan. Markets continuing to digest, obviously, what took place over the weekend. Let's bring in Christiaan, our Asia Trade co-anchor, joining us outside Parliament in Tokyo. Sherry, what happened and what now?
It's really interesting to see how Japanese stocks are rebounding and reversing those earlier losses at the moment. How much of this loss for the ruling coalition was already priced in, right? Polls were showing that the ruling coalition would lose its majority. That's what happened. We're talking about the Liberal Democratic Party and its partner Komeito falling short of that 233 seats that they needed in Parliament. And that, of course, will make a big difference on whether or not Prime Minister Shigeru Ishiba can actually hold on to his job when there is a parliamentary vote. And we've heard from him already talking about really public anger over what he called the funds issue. Remember, there's a lot of resentment here among the Japanese public, given how party members were enriching themselves secretly through funds provided by supporters. So that made a big difference on really how the public voted. And right now, the key for the Prime Minister will be trying to form a government. Many different scenarios that could happen at this point. Will he be ruling with a minority government and really compromising on issue by issue basis with other smaller parties? Will he form a coalition with smaller parties, or will he need to resign if he can't form a government? Are key issues which, of course, David, Yvonne, will have implications for the markets.
Yeah, it goes to show, right? Changing the face of a party or a coalition doesn't really, I guess, fade some of those worries that they had around this scandal around this LDP party. Now, what is the future of Ishiba now? Can you tell us a bit more? Is his job on the line?
That is the key point, right? Because Prime Minister Ishiba really took the presidency of the Liberal Democratic Party with campaign pledges about cleaning the party. Since he was elected as president over the past month, he's sort of wavered on key issues. For example, BOJ policy normalization policies coming into his premiership, we thought that he was going to be vocal about the BOJ hiking rates, but then we saw him retreat a little bit, and that's caused a lot of market volatility and instability. What happens to him right now is anybody's guess, especially as we're headed towards a press conference this afternoon in Tokyo. We'll hear from the Prime Minister himself about what he plans to do.
Yeah, there we go. Long day ahead for Sherry. Thank you so much, Sherry, on in Tokyo for us there. A quick glance at the week ahead. So certainly we're bookending this. We're starting things off with election results in Japan. And unsurprisingly, it's also Japan, of course, as we head into the latter part of this week, where you have the BOJ decision, of course, coming through. Several bits of data points coming out of China. You have PMI numbers coming through around midweek. Just keep in mind, though, you might get an aberration here because of the week-long holidays at the start of October, and then we go into, of course, this Fed conversation around the jobs numbers coming through over on Friday, which I guess the next 5 days, and if you include the next 10 days, the 5 days after this one, will be certainly key for bond markets, which have been just licking their losses recently.
Yeah, we're headed for the first monthly loss since April when it comes to Treasuries, just given what we've been seeing, right? 2-year yields have risen some 50 basis points in the past month. And what's really driving that? You got the Fed equation, and then you have to add the U.S. election risk as well, as traders are starting to price in more of this Trump victory. So what we have the quarterly Treasury funding on Wednesday, payrolls on Friday, you have the election next week, and then you also have the Fed 2 days after that. This goes to show how volatile the next 10 days are going to be.
And Halloween is the inflation report coming through.
Oh,
right?
yeah.
Yes.
Let's not forget about that.
Yeah.
Let's bring in Christiaan Tuntono, senior economist at APAC at Allianz Global Investors. Just tell us about this melt-up in yields that we've seen, right? Do you think it's really something that's more election-driven, or do you think it's really all about the Fed now?
I think it's about the Fed. I think it's about the data. Lately, we got some more resilient than expected U.S. data that support the 10-year yield to go up. Now, in one way, I don't think the actually pare back our expectation of our Fed rate cuts is that surprising, to be honest. I actually personally think that the previous market expectation of Fed rate cuts actually are probably a little bit more dovish. Right now, it's pared back a bit, probably towards the end of 2025. Fed funds target rate aim at around 3.5%. So I think that's probably about right. So this round is not that surprising to me. And previously, before this resilient retail sales number or jobs number, market was expecting a U.S. recession, right? And I think that's a little bit overblown. Now people are not anticipating that, and it shows that it's actually U.S. economy is more resilient. I think there could be volatility on the actual number, but our base case is still the U.S. is heading towards a soft landing, and because of that, and with inflation likely to trend towards back to 2%, the Feds can ease and get back the monetary policy stance back to neutral.
Yeah, and I guess before we talk about what this means for Chinese monetary policy or economic policy, does the door remain open for Asian central banks to continue easing is the other question.
Yes, I think the door is still open. We anticipated 6 Asian central banks to ease in this Fed easing cycle, right? That include China, Indonesia, Philippines, Korea, Thailand, and India. Only India hasn't moved yet, right, at this time. So all the others have moved. And we expect it to continue to do so. And especially China. I think China definitely needs to ease monetary policy even more, right, given the sluggish domestic demand conditions. And along with that, also fiscal policy is important. We're going to learn more about a complete picture of the fiscal stimulus package later on with the National People's Congress Standing Committee meeting in the early November. And we'll continue to see if the government's going to do more or widen the scope of their supports to the economy, all right, going forward.
Widen the scope would mean what? I mean, we have a date, right, November 4th to 8th. We might not get anything until maybe the end. But, does it need that magic number for what a fiscal deficit looks like? What else do we need?
I think we need to know the number because for the policy that has been announced so far by the MOF, right, in the October press conference, we can really see that most of the measures are on reducing the tail risk of the economy, like support on the local government debt financing part, supporting the property sector and refinancing the state banks, right, recapitalizing them. But still, we are short of really some explicit consumption stimulus measures, right, that are able to kind of change the structure of the Chinese growth model from more investments and manufacturing-led towards a more consumption-led economy. We relatively thin on that. There are some measures, like giving some support to students and old age elderly, but there's not too much content on that. So we'll see. First of all, we'll learn about the numbers, how many trillions are going into the measures that's already explained and told. And we'll see as next year going in 2025, will there be a broadening in terms of the supportive packages from either the fiscal side or the non-monetary side to further support the economy. Yeah.
I mean, the markets keep looking for a big number. They keep looking, to your point, for a number directly aimed at consumers. And I'm wondering whether the way that China conducts economic policy is actually attuned to Western lenses of how the West conducts monetary and fiscal policy. In other words, is our direct cash handouts in play? Like, how do we look at that?
There's already some, as I heard in some cities, there's some cash handout, but actually the number is very small. I think China is still more in the context that if they keep the economy as a whole and continue to have growth and have jobs, then people will spend. But you look in the West and you look at the U.S. during the pandemic time, they hand out directly, right, stimulus checks into people's pocket and ask them to spend. And I think China would be hesitant or very reluctant to do that so aggressively at this point in time. They still think more the mechanism is economy and then companies' jobs and for people's consumption. And also supporting asset market is something that they have been doing. That's why they want to support the property market, support the stock market. But direct stimulus through either consumption support or through greater government services through social welfare, it is something probably on the line and still in the debate. But the market is definitely look forward to see if there's more color on those.
Today's all about Japan and what we're seeing across this election outcome, which did surprise as well. I'm just wondering, does that change BOJ policy in any way? Does it push back when this next hike's going to be?
Very good questions. I think right now, right, as you mentioned earlier, the yen kind of like weakening, and then but the market kind of holding up. Maybe the market is thinking, right, would there be some changes of leadership in the LDP that in the event that Takeichi really coming in, then, because we all know that she's a proponent of Abenomics, so that would mean a weaker yen and actually a better stock market. So maybe the market is reflecting that. And there's two other potential scenarios going forward. Either Ishiba stay on as the leader of the LDP and be able to find some smaller parties in support. That's one. The second one is the Constitutional Democratic Party of Japan's coming in and lead the government. But in two of those cases, the implication on BOJ or on monetary policy actually would not be as dovish as the proponent for Abenomics, in my point of view.
Christian, have a great week ahead. Hi to your team for us. Christian Tuntono, their senior economist for the Asia Pacific at Allianz Global Investors. Right, going into the session today, and certainly oil is very much a big story, of course, this massive drop, 4 to 5%. We're looking at energy shares, obviously, on the back of that. Some trade numbers are coming through later on in the day. And, of course, we are at FinTech Week in Hong Kong, which, of course, begins today. We'll talk about the technicals on the Shanghai COP and CSI 300 a bit later on.
Yeah, a 3-week losing streak for the HSI. Of course, we're watching for Paul Chan and Eddie Yu to speak at that Hong Kong FinTech Week as well. Lots of companies reporting earnings, including the likes of Sinopec. We have BIC Motors, CNOOC, Wuxi Aptech, China Southern Airlines as well. I think there's more than half that's also going to be reporting this week, including the banks. So certainly going to be a big, big week when it comes to results. We're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Futures are flat this morning. Happy Monday.
Good morning. Welcome back to shows. As you can see, a gap lower in energy prices just about across the board, across your futures curve. The equity markets are also feeling it, a quarter 1% on energy stocks to the downside here. I mean, the headline certainly is Israel and what happened over the weekend there. So striking military targets across Iran. Following, of course, the Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage about 3 weeks ago. They did spare oil facilities, though, is the key takeaway there. Joining us now is Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace and a former U.S. State Department Middle East analyst, joining us out of Washington. Aaron, good morning from the Asia Pacific. Your initial take, sir. What now?
That's a very good question. I think the Iranians are contemplating whether or not they're going to respond or simply to absorb what has been quite a comprehensive but extremely precise set of Israeli strikes using 100 aircraft hitting 20 sites in Iran, not just with standoff missiles, but with aircraft. The targeting set, as you suggested, focused primarily on military targets, but not just on supply depots and ballistic missile launchers. The Israelis actually went after the production process and apparently destroyed at least 20 what they call planetary mixers, which are critically important for actually producing the solid fuel without which ballistic missiles can't travel. So they've done tremendous damage. The Chinese had supplied the Israelis with these mixers, and it could take up to a year. The other, to replace them, incredibly expensive as well. The other thing the Israelis did, apparently, was to eliminate the sophisticated S-300 surface-to-air defense systems that the Russians had provided. So I think the message here was unmistakable. If you respond, we have now basically made it impossible for you to defend yourself, and we will broaden our target sets. And I think that we'll see how the Iranians absorb and react to the last 48 hours.
As you highlighted how damaging this could be, Aaron, I'm just wondering, does it then raise the fears that this could actually lead to some sort of wider conflict in the Middle East? Or given the fact that in some ways it shows that diplomacy won, that maybe the U.S. is influencing Israel in some ways to only target military sites, as you say. Does that in some way also lead to some more of a regional deal?
I mean, it's a very good question. I think the reality is we may have dodged a proverbial bullet for this round, but think about it. Iran and Israel have now struck one another directly and openly twice. That creates a sort of new normal because each of them have walked away from this convinced that, in fact, they could strike each other's territory without a major escalation. So in a way, it's paradoxical. That could actually broaden their risk tolerance, particularly for the Israelis. And I think psychologically, this is a critically important point. The Israelis have debated for years what the impact of a significant strike against Iran would be. They did this strike with U.S. support, without casualties, with no losses of aircraft or pilots, and with devastating results. I worry, frankly, that if the Iranians choose, because they need to, somehow respond, even though they are low-keying the damage that has been done, the Israelis will come back with force, and you could essentially trip into what the Middle East has never experienced before, a multi-front war with U.S. involvement.
Right. And Aaron, for markets looking at this, the question sometimes might be very simple. Does this get worse or does it get better? Could you assign a probability as far as that question is concerned? And, to your point, right, we might need to rethink our definition of what an escalation looks like in your view. So if you could just run us through your thinking there.
I mean, a regional escalation would involve a significant and sustained conflict between Israel and Iran using ballistic missiles and aircraft. Hezbollah would probably join the fray and use what they haven't used before, assuming they still have them, which are the precision-guided missiles, which are capable of hitting Israeli population centers, as well as Israeli infrastructure. The Iranians, hard-pressed, because the Israelis would do tremendous damage to economic infrastructure, would probably respond not only directly against the Israelis, but against the Saudis, as they've done in 2019, where they attacked Khurais and Abqaiq with drones and cruise missiles, removing 5% of the world's oil production offline for a week or so. And then, of course, it's impossible under those circumstances for me to imagine the U.S. would not become involved. Then you have a multi-front regional war with the direst of security and economic consequences, not just for the region, but for global markets, as well as hydrocarbons. I'm not predicting that. As I mentioned before, I think we'll get out of this round without a major escalation, but it bodes ill for the future.
Aaron, ceasefire talks, I think Antony Blinken mentioned, could restart next week. Are you... That doesn't sound like you have too much hope that we could get some sort of deal this time around.
Well, you know, now that the preeminent Palestinian decision maker, Yahya Sinwar, has been removed from the scene, have the chances increased? You know, I've been around negotiations for a long time, and maybe it's true of business as well as diplomacy. People will reach deals when, in fact, they're in a hurry. When, in fact, the advantages of reaching an accord outweigh the disadvantages of not concluding one. And frankly, right now, 8-9 days before one of the most consequential elections in modern American history, presidential elections, it strikes me as very difficult to imagine Benjamin Netanyahu agreeing to anything significant before he sees the outcome of those elections. As far as the Hamas is concerned, I mean, they've been dealt a devastating blow, command and control. It strikes me that they would agree to a deal, but it would mean the release of hundreds of Palestinian prisoners in exchange for the 101 living and dead hostages that they now control. It's hard to imagine that the Israeli government, under these circumstances, despite public pressure to return the hostages, would agree to that.
Aaron David Miller, thank you so much. Senior Fellow at Carnegie Endowment for International Peace and former State Department Middle East analyst. I take a look when it comes to the pre-market and what is looking like in Hong Kong right now. Continue to see a flat market there after we did talk about this losing streak we've had for 3 weeks. We have plenty more to come. This is Bloomberg. All right, watching China's Evergrande NEV there falling some 22%. Looks like they've ended talks with its potential sellers. They decide to cease all discussions with a potential buyer on a share transfer. So there you go. Shares plummeting. We're also watching these oil stocks, just given that slump in oil that seems to be continuing here. And you are seeing the likes of CNOOC and PetroChina down more than 1% this morning. You got the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets here in Hong Kong, Shanghai, and Shenzhen. You take a look at how things are looking. It's pretty quiet, and it has been really. We see the flat Hang Seng in the pre-market. Futures are pointing negative here this morning. Plenty of risk at hand. We talk about what's going on in Japan, the oil risks, and of course, when it comes to that industrial profits number that we got over the weekend, still China dealing with some weak macro data, Dave.
Yeah, 27% drop in industrial profits, which was the second worst drop on record last we checked. And, certainly, to your point, Yvonne, markets are quiet. You look at the back end of this week, going into next week, there's a ton of event risk out there. You have the U.S. jobs report, you have U.S. elections coming through. There's the BOJ, of course. November 4 to 8, we found out over the weekend, right? November 4 to 8 is the NPC Standing Committee meeting, after which we might get more details on this round of stimulus. More on that in a moment. On top of that, we have a Fed discussion, of course, coming through as well. Now, we'll look at the open here, as you can see, in Hong Kong, in China. Let's start with that as well. We're flat. Relatively speaking, this group has done better than their peers over in Hong Kong. A couple of stocks we're tracking here on the back of earnings, like Maltai came out with earnings, of course, on Friday. Flip the boards, please, and have a look at Hong Kong and where we are as far as that is concerned. The Hong Kong Open is looking like this. So we're down 3 straight weeks. We are down slightly at the open on the Hang Seng Index. And, a couple of things today. We have trade numbers coming through later today out of Hong Kong. And then on top of that, of course, FinTech Week starts today. And Annabelle, of course, is live for us there on the ground for us with lots of good conversations coming up. And we have key Hong Kong economic and government officials set to come through as well. Very, very quickly, let's have a look at other things too. And Evergrande NEV halted on Friday. We now understand why. Sellers and buyers couldn't agree on terms. Suffice to say, stock is down 24%, gapping lower at the open. We're in the thick of earnings season. Some companies that reported on Friday going into the weekend, Great Wall, Hikvision, Wilsemi actually reported net income that actually beat analyst estimates. More earnings coming through today. In fact, suffice to say, this week is going to be extremely busy. Over 300 companies on MSCI China. Over 5 trillion of market cap is reporting this week. Some of the names coming through as far as today is concerned. And just very quickly here, one chart to watch as we move into this sort of next chapter of this, and hopefully, which is a bull market. This golden cross that formed on the CSI 300. And what's special about this is it's the first time we had all 3 moving averages pointing higher and sloping upward as that cross and as that signal was consummated, if you will. So 50, 100, and 200 day. Let's zoom into that and have a look at that. So all those lines I see on the screens pointing all the way up. Last time we saw this, the index rallied nearly 50% back in 2020. Do we get the same thing? It's a question.
All right. It all comes down to what we hear on the fiscal side of things, right? Because we also heard from China's vice finance minister telling Bloomberg that much anticipated fiscal policies from Beijing will aim to boost consumption. And as part of a stimulus push, he describes as, quote, quite large. Let's get to our chief North Asia correspondent, Stephen Ingles. He's with us. Yeah, tell us more what Liao Ming said.
Well, it's an interesting scoop that we got from Bloomberg News on the sidelines of the IMF World Bank meetings. Liao Min is, even though he's vice finance minister, he's fairly influential, and the Americans know him quite well through those Trump-era, trade disputes or discussions. And he's a fluent English speaker. He talked to Bloomberg News and basically said the size of this current round of stimulus will be, quote, quite large in scale. Now, is he talking about the past rate cuts and mortgage support, housing support, more cash for banks as far as the monetary support, the cut in the reserve ratio requirements, or is he talking about the impending big fiscal number that we haven't gotten yet? On that, change the pay. Oh, yeah, this is the quote he says. There's a legal process to go through for China's fiscal policy. What he's talking about is the National People's Congress in Beijing. The standing committee of that needs to approve any kind of fiscal outlays. And they're going to be meeting the first week of November, the 4th to the 8th. And that's when we're likely to get some sort of number. The big question is, how large a number is it going to be? Citibank analysts have said it could be in the tune of 3 trillion yuan, 421 billion US dollars. Goldman Sachs says it could be upwards of 5 trillion yuan over the course of multiple years. But again, Liao Min said it's going to be quite large overall, the stimulus, the monetary stimulus as well as the fiscal stimulus. So far, a lot of that stimulus has been targeted at containing risks, especially at the local level, with the debts incurred by the LGFVs, the local government financing vehicles. But it hasn't addressed really boosting demand and boosting consumption. So that's what we're going to be likely focused on, and that's what Liao Min says. This fiscal overall package of fiscal stimulus as well as the monetary stimulus is going to be targeted at consumption and growing the economy and hitting that target of around 5% GDP growth that was given last March.
Yeah, and amidst this this march towards more details in the number, we keep getting, we get constant reminders of why we're here, right? Yes. Weak economic data, and I think on the weekend we also got another set of numbers that just simply reminded us of the sort of lack of price pressures in this economy.
Yeah, so it's a chicken and egg thing, right? These companies are in a deflationary spiral because the factory gate deflation has persisted now for 24 consecutive months. They don't have pricing power. There is overcapacity in industrial space in key industries in China, regardless of whether the government says the West is concentrating too much on that. Janet Yellen was the latest to say the stimulus so far has not targeted this overcapacity issues. And that overcapacity issue in many industrial areas is one reason why industrial profits announced yesterday, Sunday, were down 27.1% year over year. Yes, there are base effects, but still, these corporates in China, key component of China's economic growth is the industrial base, whether it's EVs or steel making and the like, is suffering for 2 consecutive months, 17% down in combined profits in August, on top of 27% in September. So we have to kind of see, they're obviously waiting to see what kind of stimulus can help end the deflationary spiral that has really hurt the profitability at these industrial giants.
Steve, thank you. Stephen Engel there, our Chief North Asia correspondent, really touching on, well, the 2 E's really that will determine whether this bull market will and can continue. In fact, really more on the other E earnings coming through, right? We'll need to see earnings pick up. We'll see the economy pick up. Hopefully, the numbers start to align themselves. And we'll probably get your best sample size this week as far as earnings go. MSCI China, 323 companies on the index are set to report numbers this week, and we're getting, in terms of how big these companies are, nearly $6 trillion of market cap are reporting earnings this week. Oil, big banks, what have you, Yvonne.
Yeah, it's a big deal. And I've got to wonder if it matters, given the macro backdrop that you mentioned. Are we going to hear anything in terms of the forward guidance on what the stimulus is going to mean for these companies? That might be more important than what we're seeing in terms of the actual results as well. We're going to check, of course, the results of this election in Japan and really the shock that we're seeing across dollar yen and the yen traders here at the moment. You take a look at how some of these yen crosses are doing, and for the most part, you're seeing weakness in the Japanese currency across the board. Dollar yen now approaching 153, close to 154 levels here. So 3-month lows for the yen against its major peers. Let's get to our FX and rates reporter, Michael Wilson. He joins us now. Michael, you know, the yen was already dealing with plenty of headwinds overseas, the rates outlook, the like. Now you add an element of political turmoil at home. What does this mean for the direction of dollar yen moving forward?
I think without doubt we're going to see yen weaken. You know, the backdrop is pretty much a perfect storm for the yen. The Japanese investor is knowingly conservative at best, so any sort of uncertainty, they will interpret that, you know, even if it starts off in the political space, they'll, you know, wind that back to what it means for monetary policy. And if they see that, you know, okay, October, this Thursday is probably off the table, and that's fair enough. But they can see that there's a lot of complications, even into year end, where, you know, we don't even know who the leader of the LDP will be, whether or not they'll be in power as a coalition or not. There's another thing. But you know, if they do decide to spread the love and, you know, make as many deals as possible to form a coalition, that's going to speak to a lot of fiscal spending, which, you know, is probably not really good for the yen. So I think that, you know, while that is in play, you know, markets are going to avoid the yen while they can. And then you've got the division within the LDP itself, where, you know, there's a press conference by Shiba later today. You know, that would be that'll be closely watched, obviously, but it does complicate matters further on if there's you know, no clear winner, no coalition formed. Be there in a situation for a runoff vote if it's not done within 30 days. Now that, you know, comes in and around the December meeting, and I think that the yen fans will be, or yen loyalty will be sorely tested, and I think we might be up around that 155 plus at that stage.
Yeah, Michael, you know what? That's going to go on the T-shirt. Avoid the yen while you can. You talk about 155. Is there a path from 155 to 60 in your view?
I think that there probably is, actually, because while all this is going on, I think that the Ministry of Finance is probably, I won't say got their hands tied, but they'll be certainly crank up the jawboning. They'll let the market know that they're not, you know, happy with the level if it gets there, you know, too far, too fast. But in terms of actual intervention, they'd probably be a little bit sidelined in that regard. They don't want to be complicating matters even further by creating this synthetic supply of dollars and to support the yen. So, you know, if that happens, you know, the more that they can only, you know, jawboning will only get them so far. So we could probably, like we had that little blow off top before the election on Friday to 153.20. The pullback was very shallow, and we've kicked on this morning. So I think we could probably have price action like that extend in, and we could find ourselves quite easily on maybe on a strong non-farm payroll print. We could see ourselves somewhere between 157 and 159. And then if we saw the 160, then you would see some serious jawboning by the Ministry of Finance. But again, whether that leads to actual intervention, I'd be surprised. Which is a bit of a red rag to a bull for a hedge fund.
Right.
They will test the waters as much as possible. If there's nothing there, they'll keep going.
Michael Wilson, thank you, our FX rates reporter, joining us the latest on yen. In the next hour, we're going to take a deeper dive into, of course, the U.S., Japan, and China relationship with the Japan Institute for International Affairs and how an upcoming leadership transition in Washington might impact those ties.
But ahead of that, we're live from Hong Kong's FinTech Week, where we'll be hearing from 3Cap's founder and CEO Esther Wong joins us in a couple of minutes. That's coming up. This is The China Show.
Well, Hong Kong FinTech Week begins today, bringing together international leaders in finance and technology. Our tech reporter Annabelle Jewellers is at the event live for us and standing by with our next guest. Belle.
Thanks, Yvonne. Yeah, Hong Kong FinTech Week just getting underway for another year. It's expected to draw around 30,000 attendees, and of course Hong Kong really trying to put its crypto sector, its FinTech sector on the map and into what could be the future of finance. But let's bring in our next guest, who's Esther Wong this morning. She's the founder of 3Cap, which is a VC fund that's focused on AI. Esther is someone, of course, who worked for quite a period at SenseTime, which is one of the best-known AI startups in China. But Esther, I want to get started with a fund that you launched earlier this year that's focused on AGI, which is artificial general intelligence. It's sort of a very powerful form of AI that essentially wants the machine to fully mimic the human brain. There's a lot of debate around whether AGI could even become a reality. What's your take on that, and what sort of timeline are you looking at?
Thank you, Annabelle, for the question. Yes, we believe that AI is entering the next phase. So in the previous 7 years where AI, we call it AI 1.0, where we know that AI can work, but due to cost and also actual efficiency, it's not being widely implemented. But 2 years ago, we see this can be a moment, we call it AI 2.0, where everybody now is using some kind of AI tools like ChatGPT and the like, right? So we believe that timing is right for potentially the next phase of growth, where the AI model itself is potentially at a pathway to be smart enough to be more widely utilized by the general public, and that we call the moment of AGI coming very soon. And when I say very soon, I believe potentially is within the next decade for sure. Depends on your definition, but to be fully interactive with a machine, I believe that this is entirely likely in the next decade.
In the next decade, are you thinking about that also in terms of where AGI is developed? Do you see it being developed at the same pace or the same rate in the US versus what we see in China?
Good question, because AI development takes a lot of different elements to make it work. So obviously you have the AI great nations such as US and China. But I think from a more fundamental level, a lot of these days what you hear about is AI taking or consuming a lot of power. So I think to make it more sustainable, it's not just a matter of two big nations racing against each other, but we actually need a lot of collaboration from a more fundamental level that actually involve a lot of the resource countries, including emerging market economies as well. I mean, if I can elaborate on this a little bit, AI currently accounts for almost 2 to 3% of all the world's power output. That number is going to increase to almost 8% by 2026. Okay, and at this current rate, it's clearly not sustainable, because what we have used for AI using so much power right now is just for training models. So who are training models? You have the hyperscalers of the world, such as the Google, such as the Baidu, and or including some great AI scientists from startups around the world. But that's only for a particular group of scientists. But think about the next phase of AI. When we think about AGI, we move from the training phase to the inferencing phase. Inferencing phase is when everybody can actually use it. So every time when you ask GPT a question, that's using edge inferencing. And that, imagine 8 billion people using that. So the AI power trajectory at the current rate is clearly not sustainable. If I have to say that if there's one big bottleneck of AI, it's how to make AI more equitable and also more sustainable. And that is what we try to do in our fund. Our investment direction focuses on that.
What about the sort of monetization aspect, though, of the technology? Because a point's been made, for instance, that Accenture at this point is making more money from consulting fees on AI than OpenAI is making from creating the technology itself. I know there's the concerns around energy consumption, but what about the actual real-world application of it?
Good question. So I believe that there's a lot of potential immediate application of AI. And for me, as a parent, right, in terms of the actual application layer, I think education is one. And I also feel like healthcare is a tremendous one. So in terms of education, we can think of AI as this potential great reset. Okay, so we can actually unleash the human capital of people around the world with a very tailored AI sponsored curriculum. What do I mean by that? Schools around the world right now, we teach our kids by the education level, by their age. Okay, but every one of us is different. So can you imagine if all of us has a private tutor? And then they can lead up to our full potential. So that is super powerful. So I believe that is one investment area that people can focus in is AI in education. And I believe that parents or governments are willing to pay for that. Imagine how powerful it is for a kid from Tokyo to Shanghai to Hong Kong to Mumbai to New York have the same quality of education. That unleash of human intelligence in itself is enormous. And I believe that can amass in a lot of economic outcome as a result of that. Now, the other one that I feel quite optimistic is actually AI in healthcare. Now, this year's Nobel Prize went to protein folding. Protein folding, basically, one went to designing the protein itself, and then the other went to the DeepMind group that actually predict the protein folding. But why is that important? Because the shape of the protein determines its function. And once we know what the function is, we can potentially try to see what went wrong when the protein went wrong. So that actually can lead to tremendous, and I mean tremendous, discovery in drug discovery and also potentially curing cancer and also dementia. So people can basically age with a lot of dignity. And I believe that as the population is aging in a lot of these developing countries, that can also bring tremendous commercial opportunities as well.
All right, Esther, thanks very much for your insights there. That was Esther Wong, the founder of 3Cap, which is a VC firm focused on AI with a new fund as well launched early this year focusing on AGI. Yvonne, Dave.
Belle, great stuff. As Belle was having a conversation here, the Japanese yen continues to weaken right now. So dollar yen is 1% up for the day. It's also weaker against just about every single one of its major peers right now. So there is the dollar side to the story, but this is also very fittingly, when you look at the yen across most majors here, also an election story over in Japan. More on this, of course, in a moment. Does this handicap the BOJ's ability to deliver higher rates moving forward? That's an open question. Plenty more ahead. This is Bloomberg.
Welcome back. Here are some top global headlines we're tracking today. China has filed a diplomatic complaint with the U.S. and says it reserves a right to retaliate following Washington's latest weapons sale to Taiwan. The U.S. has approved of some $2 billion of military sales to the island. Tensions in the Taiwan Strait are elevated after China held military drills around Taiwan earlier this month. Queensland has become Australia's first mainland state to elect a centre-right government in more than 18 months. It's a shift away from the labor market's hold on power ahead of national elections due by May. Local media predict the Liberal National Party, led by Premier-elect David Crisafulli, could win a majority in the state parliament. Labor has been in office there since 2015. Thailand is reportedly planning to raise the retirement age to 65. The Bangkok Post quoted the country's labor minister as saying the government wants to increase contributions into the nation's social security fund to extend benefits to 2 million migrant workers. The retirement age in Thailand for government officials and employees is currently 60.
For a brief look at markets, so we're in the thick of earnings season. Just to recap some of the big earnings reactions so far. So Thai. And, by the way, apologies for that typo on your screens. There we go. But effectively, you know what you're talking about here anyway. Thai came out with earnings. It missed estimates, but here's the deal. Morgan Stanley and Citi came out and said, Morgan Stanley's still overweight. Citi still has a buy rating here. Still on track here to meet the full-year target. That's most important here. Great Wall Motors are also out with earnings, as with PopMart, which is more a story on the placement, $204 million, which a placement at a discount does that to the stock. Very quickly, have a look at where we are as far as the broader markets are concerned here. First day of the week. We've almost gone opposite ways, diverging ways, I think is a more fitting description of that, between the A and the H share market. A shares have held up relatively well compared to Hong Kong, which is on a 3-week losing streak, and we're down about 0.6% here in Hong Kong to begin this week. There's plenty more ahead here on the China show, including the top stories, everything from oil to Israel to Japan, plus the week ahead, of course, a shot of Lujia's way in Shanghai. First 30 minutes of trade, you're watching the China show.
Welcome back. A live look out of Tokyo here this morning as we kick off the second hour of the China show. And we're watching very closely what happens to this yen, right? So we're seeing 1% weakness against the dollar here. We're approaching that 154 level as we speak after this shocking LDP election result over the weekend, where the coalition partner Komeito and LDP falling short of majority the first time since 2009, Dave.
Yeah, it's quite some time since we've been able to, a non-LDP-led government in Japan. And, markets are waking up to this, and I imagine when London wakes up, which tends to happen, we do get a further upside in some of the initial reaction we get in Asia, particularly on a Monday when you have a gap higher of this sort. So 1% on dollar yen, as you can see, also weaker by about the same amount against some of the major peers. This is the one story. The other story is in oil markets, where it's the opposite, a gap lower in oil prices. Brent, West Texas, Shanghai crude, as you can see, 2 to 5% lower. We're now down 0.5% on the energy index in the equity markets, which takes us into the state of cross-asset markets as we go into a fresh trading week. A lot of earnings on deck. Then you have the BOJ decision, plus you have the jobs report coming through. And then we'll start talking about the elections and the Fed conversation. We're down about the 10 to 1% on the Asia Pacific. We're higher, though, on S&P futures. We're also higher, as you can see, across the Treasury curve. 2- and 10-year yields up about 3 to 4 basis points right now. So this constant repricing of a stronger dollar is showing up again here in the Asia Pacific.
And adding on to already what has been 3% gains in the dollar for the past month already here. Let's stick to Japan now and bring in our team. Our MLS strategist Mark Cranfield, also our Tokyo bureau chief Isabel Reynolds joins us now. Isabel, I'll start with you. The loss of a coalition majority is a severe blow for Ishiba-san. What are his potential next steps moving forward?
Yes, absolutely. As you say, he was only elected to this position a month ago. It must have seemed like a good idea to go into a general election immediately after being appointed as the party leader, because generally you get a bump in the polls at that point. This time, that did not materialize for various reasons. General dissatisfaction over the scandals that have affected the LDP over the past couple of years, plus concerns over inflation and the economy. That has made the electorate pretty unhappy at the moment. And they certainly showed it yesterday, and overnight we saw those results. So what he needs to do going forward is to find other partners beyond the Komeito that the LDP has been working with for decades. and to find to put together a coalition that can take a majority in Parliament. The strongest possibility is the party called the Democratic Party for the People, which stemmed from a previous opposition party. It was sort of a centrist type of party. But they've already said that they're not really interested in having a coalition. So we have to see whether that works out. If it does not, there are other smaller options within the Parliament who could potentially be partners, or the LDP could seek to work on a sort of case-by-case, legislation-by-legislation basis with some of these smaller parties in Parliament.
Mark, let me bring you in on the market angle. I mean, you look at specifically the currency markets right now. This doesn't seem to be an outcome markets were expecting. But it's also not as if there are still a lot of bearish positions out there on the Japanese currency, given the run-up in the dollar. But do you see more upside, I guess, suffice to say, in dollar-yen here, Mark?
From a foreign exchange trader's point of view, it's like an early Christmas present here. I mean, everything is just coming together for giving you a fairly clear read that dollar-yen can go higher in the near term. It's not just because of the Japanese election. We've got the Bank of Japan this week. We've got US elections next week, and we've got the FOMC as well. And because Japan has been put into this position where they've got, it's not even clear how or when they're going to form a government, that obviously means there's going to be no direction from the Ministry of Finance to the Bank of Japan. So not only will we get a dovish read from the Bank of Japan this week from their policy meeting, it will probably filter through that they cannot give any guidance on what they're going to do in December. And traders will read that as meaning rates are on hold again in December, which obviously is a yen negative. On the flip side, here you have a US election coming where people are getting more confident in the markets, at least, that it's going to be a Republican presidency, which means a steeper yield curve. Federal Reserve probably having to go on a pause at some stage, possibly as early as December. That's all dollar positive. So from both angles, it's becoming relatively clear for foreign exchange traders that the path for the time being is higher for dollar-yen. Now, you could say, well, the Japanese can do intervention. But they've seen before, they've learned their lessons pretty well, that intervention not only needs you to go into the foreign exchange market to buy the yen, you need your central bank to be on the other side, to be adopting policies which support the currency as well. That's why it worked in July and August. The market saw that. At the moment, the Bank of Japan is out of the picture for the time being. So even if they intervene in the market, it'll be very one-sided. Traders can see that, and they won't see it as much of a threat. In fact, if they intervene too early, traders may just see it as a reason to buy even more dollars.
Yeah, it certainly complicates the outlook for the Bank of Japan. And Isabel, I'll bring you back in on what this week government would suggest, right? What does this mean for the future of the LDP now?
Right. Well, it's a little bit difficult to gauge at this point, but I think it's sort of rather early to be declaring an end of the dominance of this party, which was formed in 1955 and has been in power most of the time since then. Of course, they did lose power previously in 2009, for example, but just over 3 years later, they came sweeping back with Shinzo Abe as leader and with this new idea about massive monetary easing. And that, that worked very well for them for a decade. So it's not out of the question that something like that could happen again. But I think we are in for a period of uncertainty at the moment. There's nobody, obviously, in the wings as a strong leader who could take over from Ishiba immediately. Neither is there, enough momentum behind the opposition, the main opposition party, to do likewise. So, yes, things are very uncertain for the time being.
Mark, just some final thoughts for you as we kick off a fresh trading week on maybe Japan, maybe on other things too. What else is top of mind for you, Mark?
Yeah, I mean, it's hard to see how these so-called Trump trades are going to reverse in the near term. You're seeing a continuation steepening in the Treasury curve. People are still pretty optimistic about the outlook for the U.S. equity market. And you've got a Federal Reserve who most likely are going to go ahead with a rate cut next week, although doubts are coming in about later in the year whether they would need to pause in December. But all in all, it's going to be pretty hard to tell people not to continue with that. And the spill-off across the markets from that, obviously, is that higher yields could be a headwind for emerging market currencies. Against that, China may well emphasize more stimulus, which may separate those markets. But overall, emerging markets are going to struggle with U.S. yields going higher.
Mark, thank you. Mark Cranfield there, MLI strategist, joining us out of Singapore. Also, our thanks to our Tokyo bureau chief, Isabel Reynolds. Well, still ahead, we're going to be talking about U.S.-Japan relations with the Japan Institute for International Affairs as Washington prepares for a leadership change. Plus, we'll be hearing from AlphaTrio Capital on sustainability and impact investing in Hong Kong, where we're going to be live from Hong Kong's FinTech Week. Next, this is Bloomberg.
Welcome back. Happy Monday morning. You're watching the China Show. Well, the FinTech Week, Hong Kong's FinTech Week to be more specific, is underway. And our tech reporter, Annabelle Jewellers, is standing by with her next guest, who we normally speak to about her hotel business. But today, Belle, there's another topic, of course, in under the radar there with Poman. By the way, tell Poman I said hi.
David, actually, I've already passed on that message to Poman this morning, but she is someone who wears a lot of different hats. This is Poman Low, AlphaTrio Capital, founding managing partner, and you're here to talk about climate, sustainability, impact investing in Hong Kong. And as a finance hub, it's not always that direct association we make with Hong Kong as a city and also with green tech or green financing. Can you draw that distinction for us?
Yes, so I actually sit on the Green Finance and Tech Committee in Hong Kong. So I know that Hong Kong does have the aspiration to be a green tech and financial hub in the world. First of all, we are already one in terms of green finance. We are the largest issuer of green bonds. And you can also see that the government has laid a lot of infrastructure for green finance. So 2 years ago, we had the first carbon credit marketplace for climate. And just earlier this month, HKMA has launched the Sustainable Finance Action Agenda. And also, Hong Kong is really committed to becoming a tech and innovation hub. So historically, we only devoted about 1% of GDP to R&D. Now the government has really stepped up funding to over 100 billion, including 30 billion for a tech hub near the border. And also with greater integration with GBA, I think Hong Kong and GBA does have great potential to be one of the most thriving green tech hub because of China's commitment also to attaining net zero by 2060.
Government policy and support is one thing, but then on the other side, you've actually got to see pick up. There's got to be sort of that demand. What's the institutional side been?
Definitely more and more interest. I think, I've been speaking at various conferences, and sustainability is obviously at the top of the agenda across many occasions. But more importantly, I think there's increasing awareness that the greater the risk, the greater the opportunities. So to really help accelerate the transition, we need trillions of dollars, at least $2 trillion a year. So we are in the decade of action, and whoever can seize this opportunity can actually turn these risks into opportunities. So I think Hong Kong really is set to capture that.
You've just you've actually just closed the first round for the fund. You're looking at raising 100 million overall, but you're at 50 million now. How long has that process been to get to this point? How difficult has it been to convince investors in this sort of environment? What's the reception been so far?
Honestly, it's taken us longer than expected, mainly because of economic headwinds and also, rising interest rates. And overall, I think it's the lack of conviction in doing well by doing good. We call our fund AlphaTrio because I believe that actually ESG impact can be alpha generating. It's also the brainwave associated with innovation. And Trio is our belief that each investment can in fact drive triple returns on people, planet, and profit. We actually launched the first carbon neutral hotel 14 years ago, and since then we've been investing in climate tech ventures to help decarbonize our operations. We find that it's actually possible to do well by doing good. These companies are successful because of the impact they deliver, not in spite of it. That's why I built this fund, because again, we are in Asia. It's the greatest economic growth engine, but we also are responsible for 2/3 of the emissions. So if we're serious about driving this transition, solution. We can't leave Asia out of the equation. It's also where the greatest opportunities are because we are hit the hardest, but we can also be part of the solution.
You mentioned perhaps a lack of conviction. You're targeting a 20 times return for this fund. If you were to look at the public markets, ESG funds in Asia have returned around 13% year to date. That would be in line with the broader benchmark. Why do you think that you're going to get such a greater ROI?
Well, because we are an early stage venture fund. Of course, we only focus on Series A and B, meaning there's already revenue traction. But I truly believe in our investment thesis, and that's that the next wave of unicorns will in fact be climate tech, sustainable tech companies that can help us solve the world's most existential, most pressing environmental challenges. So there's no reason why these companies will be more successful if they can actually help deliver decarbonization. And also, when we look at certain sectors like crop tech, agriculture, food tech, clean tech, we don't just serve as their impact partner, helping them with impact measurement and management, but we also help them scale as a commercial partner. And that's precisely why I've put together this fund, to kind of foster an ecosystem, because these startups, they don't just need capital, they actually need use cases, and that's where all the corporates can actually help them achieve commercial scale and thrive in the whole platform.
You mentioned a couple of different sectors then, but as you look to deploy this capital now, you've already made some early investments. What would be sort of the standout sector or the standout region, country that you're looking at?
As a region, again, I'm very bullish about Asia, simply because...
Can you drill down on Asia, though? It's quite big.
Especially Southeast Asia, I think there's a huge need there. The young population, digital transformation. And in terms of startups, we focus on China and Southeast Asia. There are a lot of Chinese entrepreneurs very keen to export their technologies. We also look at technologies in, say, Europe and China and US, because in some cases, especially Europe, Israel, the local market is small. So they're very keen to come to Asia. So we help them build this tech corridor with tech exchange and knowledge transfer, and actually help them penetrate through Asia.
All right, thanks very much for your time, Poman, this morning. That was Poman Low there, the founding managing partner of AlphaTrio Capital, joining us as she prepares to speak at Hong Kong FinTech Week later today.
All right, great stuff, Belle. Plenty more ahead. This is Bloomberg.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
You're watching the China Show. Some top corporate stories we're following for you today. Bloomberg has learned that Boeing is planning to launch a capital hike as soon as Monday. A source says the playmaker could raise over $15 billion from the fundraising, but the amount could still rise depending on demand. Boeing last week received clearance from the U.S. SEC to sell as much as $25 billion of equity and debt in a move that could help it avoid having its credit rating downgraded to junk. Google plans to preview AI technology that will take over a web browser to complete tasks such as research and shopping. This is according to tech publication The Information, and Google is reportedly set to demonstrate the product as soon as December with the release of its next Gemini large language model, the publication says. Now, codenamed Project Jarvis, the product intends to target users who want to automate everyday web-based tasks. TSMC founder Morris Chang warns that the chip giant will soon face its, quote, most severe challenges in driving growth amid trade tensions. The go-to chip maker for Apple and Nvidia has been restricted by the U.S. from making advanced AI semiconductors for Chinese customers. Despite this, Chang believes TSMC has a strong team that will ensure its success. All right, we're taking a look when it comes to what's ahead. And we talked about this week. Yes, certainly plenty of event risk. We talked about the BOJ. Certainly what we're watching very closely is any sort of indications of what this uncertainty in the political sphere in Japan is going to impact what the central bank is going to do. You have that jobs report on Friday to deal with. You throw in the Treasury in the U.S. and how they're going to have some refunding announcements on debt sales and the like. There's like a 10-day window, Dave, where you start to have a lot of volatility in this bond market potentially, right? And we haven't even talked about the following week, U.S. election, Fed, the like.
Almost in the same, I think the same 48-hour window within this 10 days of this 10-day test.
Yeah.
As our folks at Bloomberg News have put out. And by the way, there's a really great story that certainly outlines this as well. And, you know, keep in mind, we're coming off this massive melt-up in not just Treasury, global yields. You know, you're seeing that play out in, you know, the Japanese story today. We're up 4 or 5 basis points in Japan. And, you know, at some point, maybe soon, we'll start looking at this bull market in the equity market and start talking about, oh, cash is now attractive again with this melt-up in yields. And, you know, one of the notes I, caught my eye over the weekend talked about how equity valuations going into next year, when we know the U.S. will either be slowing down, the extent to which is still up for debate, at valuations at these levels, right? Yeah. And the debate is still out in China. Might the best course of action be to lean outside equity markets and maybe go further back into cash? Who knows?
Yeah, we had someone last week say, look, they're extending their exposure to equities but still overweight cash. Yeah, which is sort of the hedge, I guess.
And gold.
And gold, right? Is that more of a macro story or politics? Esther had a great note saying, look, gold is defying what we're seeing, right? A stronger dollar, rates outlook. And it's really what's going down to the geopolitics. Oil, on the other hand, they think it's not really so much about that Middle East tensions, this kind of geopolitical risk premium. It's more about the macro. Yeah. Just given how we really haven't been able to sustain above $80 for oil despite these tensions. So
and the cuts.
And the cuts.
And the output cuts,
So there's a lot going on, a lot of crosswinds here, and certainly the earnings side of things is still key to watch, particularly in China.
Yeah, as far as guidance goes, right? So we're going to get the thick of earnings season. 300 companies are coming out this week, at least on MSCI China. And, it will probably be too early and premature to expect these numbers to reflect the policy pivot. But can we apply the same thinking to forward guidance and margins and CapEx spending? Because when these CEOs start opening their wallets, that is a good indication of confidence. And as far as the market goes, right, we're looking for the next big thing, whether that's a big number coming out of economic officials or is it a big number coming out of its earnings season. 5.7 trillion worth of market cap reporting this week on MSCI China.
Yeah, is it going to be more about policy? That's still what's been driving these markets, or the fundamentals, right? And certainly we're not going to see any signs of the stimulus really playing out when it comes to actual numbers. But yeah, as Dave mentioned, we're watching very closely what these CEOs are going to say about what the prospect of fiscal policies are going to mean for valuations and, of course, earnings outlooks. But yeah, you take a look at how the market is looking at here this morning. It certainly is showing that we're still pretty slow in China. But then again, you have this volatility in the property market. There's some local media that we've been seeing in China talking about major cities seeing a jump in property sales in October. So perhaps some of these kind of ongoing stimulus measures we've seen is taking more of effect now in maybe the physical side of things. Yeah. So there you go. You have Greentown up some 6%. But yes, this has been a very, very roller coaster sort of ride for some of these property stocks for the past few weeks.
In fact, let me put some numbers to that. So the numbers we're citing here are from the Securities Times, and they're citing agency data. So I'll give you a good number. Nearly 13,000 property deals were signed in Beijing in October through the 26th of the month. We have about a week left, right? So compare that to the same period last month, which is a good comparison, right? So it's sequential. It compares it to prior or just as we were entering this policy pivot. That's a 21% increase from September to October. Shenzhen, this is another thing too. Over 4,800 deals were signed. That's the highest at record. Shanghai was 14,400. First 20 days of October, that's a 50% jump month on month. So in other words, if some of these numbers are anything to go by, you are starting to see at least the volume and activity start to pick up. Now, it's another thing altogether for prices to start picking up, right? That's another indicator of whether or not we will see buyers jump back into this market as indicative really of confidence into this market. And by the way, right, we hear this a lot in the shows, they fix the property market, they fix most of the problems in this economy. Earnings, multi on your screens, we're coming off lows today. In fact, we now flipped to the positive here. That's despite this profit miss, although if you listen to the likes of Morgan Stanley and Citi, they actually think the company is on track to meet its full-year target. Great volatile with earnings. PopMart is a offering story. We're out now down 2%. NEV is a deal that didn't transpire, so we're down 13%. The buyers and sellers effectively left this one on the table for now. The stock is resuming trade today after being halted, I believe, on Friday. There's another big story,
Olympus.
too. Yeah.
This is what we're watching out for, given the CEO, Stefan Kaufmann, resigned after an investigation into allegations that he purchased illegal drugs. So the stock is down close to 6%. His resignation was effective immediately. But yes, a pretty stunning exit for the CEO after just less than 2 years at the helm.
Yeah, there we go. And to continue the Japanese story, this is really one of the few red spots across the Japanese market scale, because a weak yen is creating this tailwind for the equity markets in Japan. As you can see, Nikkei is up 1.5%, headed into the Tokyo lunch break. More of the Japan story just ahead. This is Bloomberg.
.29 a.m. in Tokyo. Japanese markets heading to that lunch break as we continue to digest what happened over the weekend, that LDB shock and losing that majority among that coalition. So what is next for Ishiba? That certainly is a key question. But equities seem to be kind of fading this one away, this political uncertainty here right now. Maybe that's thanks to that weaker yen, which continues to be that big story here across some of the major peers. We're close to 154 levels for dollar-yen this morning.
Yeah, I mean, if the BOJ doesn't hike rates or can't hike rates, of course, that's a theoretical extrapolation. It's good for equity markets, right? Some parts of this equity market. Let's stay in Japan, really, on Yvonne's point, right? So you have elections coming through in the weekend. Certainly the outcome there unexpected. This long-standing alliance with the U.S. certainly playing a fairly crucial role under the Biden administration as Washington then seeks to counter China's growing influence. Now, we take a look at some of the issues facing the relationship between the two as Washington prepares for this leadership transition.
Japan's Prime Minister Shigeru Ishiba is a self-declared defense nerd who's advocated for stronger ties with Washington. The question is what that relationship could look like.
Ishiba has not only called for a more equal security partnership with Washington, at one point he even wanted a NATO-like alliance in Asia to deter China and North Korea.
Whether he'll be working with Vice President Kamala Harris or former President Donald Trump, Ishiba's government faces a difficult balancing act as the U.S. seeks alignment on tech export restrictions to China. Japanese firms, including Tokyo Electron, play a key role in the chip supply chain and are heavily reliant on orders from China. Beijing has threatened retaliation if Tokyo further restricts the sale of chip-making tools, and those actions could affect crucial materials for exporters like Japan's auto giants. That leaves Japan caught between its two biggest trading partners. A Trump win might mean more tariffs on Japan's own exports to the U.S.
You have to pay for your cars. You're sending millions of cars. You don't accept a car from us.
Bloomberg Economics estimates a sizable shock to Japan's U.S.-bound exports if Trump wins and goes ahead with his tariff plan. Another potential stress test may be Nippon Steel's $14.1 billion bid for American industrial icon U.S. Steel. The takeover has become an election flashpoint, and both Trump and Harris say they'll block it.
I would stop it if it hasn't been completed by the time I'm president.
U.S. Steel should remain American-owned and American-operated.
Still, Washington insists the Japan-U.S. alliance will remain intact, even as both countries' new leaders may need to recalculate ties.
Japan's relationship with the United States is bigger, deeper than one financial or business transaction.
All right, let's bring in Stephen Nagy now, professor at the International Christian University's Department of Politics and International Studies. He's also a visiting fellow at the Japan Institute for International Affairs. Professor, thank you so much for joining us. Before we get to the U.S. election, I want to get your take on this election domestically, what we saw with this LDP shock. Do you see this having any sort of implications for foreign policy in Japan?
First of all, we didn't expect that. We thought that there would be the LDP would lose its majority, and with that, I think that many of us that are looking at the Japan-U.S. relationships feel that the U.S. was already prepared for this result, as well as other friends and allies of Japan. The U.S.-Japan alliance is really the cornerstone of Japan's security. Japan continues to invest heavily in that relationship, both in terms of joint leadership, but also in terms of expanding that defense partnership throughout the region. And really, whether it's a Harris or it's a Trump in the office, these trends are going to continue. The question for the United States and like-minded partners is really to think about how erratic or more domestically focused Japanese relationship and domestic politics is going to impact Japan's ability to lead in the region.
Okay, do you see, well, let's talk domestic then, since that seems to be where we're going, at least initially here. Professor Nagy, do you think, right now, I think it's the last time the LDP did not have a majority was 15 years ago. Do you think that it in some way handicaps the ability for Japan to maintain regional leadership here?
Well, the LDP is going to have to form a coalition with some of the opposition parties. And that means that the opposition parties are going to focus on domestic politics, the issues that matter to ordinary Japanese, such as inflation, such as issues regarding low birth rates. Even the cost of university education is of a concern for the ordinary Tanaka and Suzuki. So those opposition parties are going to work hard to put their agenda on some kind of coalition. And that means that the LDP is going to be less focused on foreign policy and much more focused on trying to hobble coalitions together to get some support for domestic policies that have some concrete takeaways for the ordinary citizen.
And obviously, when you talk about the U.S.-Japan relationship, you have to talk about how Sino-Japanese relationships has been. I mean, it's a very complicated relationship. There's the security angle to all this and the defense ties. And then there's the trade partnership that Japan and China has. Talk through these complexities and how does Japan navigate through both?
So you're right. You know, last year, despite record unfavorable ratings in Japan of China, there was about $380 billion of bilateral trade. And that trade is by and large equal. That means that both China and Japan are benefiting from this relationship, and they're somewhat dependent on each other. Moreover, there's about 20,000 small and medium-sized Japanese enterprises in China. That means they're hiring hundreds of thousands of ordinary Chinese. They're providing that human capital building and training, and of course the transfer of some technology. This means that the Chinese economy is somewhat dependent on the Japanese economy, and the Japanese economy continue to engage. And vice versa. We see Chinese businesses and Chinese citizens buying Japanese products, and that's going to continue. So what we think is that, you know, there's limits to the securitization of the Japan-China relationship because they're mutually dependent on each other. But that being said, there's real challenges in the relationship, whether it's the Taiwan Strait issue and how Japan has really voiced their concerns about, you know, what happens to Taiwan matters to Japan's security. And of course, for the Chinese, they're worried about increasing coordination between the United States and Japan and other countries in what China understands as its backyard. So those tensions are really obvious, but so are the complementariness of the economies, making dealing with the hard issues much more complicated.
Yeah, Professor, I think to your point, right, this is a multifaceted relationship. It's almost like Japan, correct me if I'm wrong, is having its cake, or keki, I think in Japanese, is having its cake and eating it too, right? Maintaining that security relationship with the U.S., but at the same time, there's this economic relationship that is increasingly year by year skewed more towards Japan and China. And I'm wondering how strong you think the U.S.-Japan alliance can remain amidst that economic reality.
So I'm very confident in the U.S.-Japan alliance. The reality is that the U.S. and Japan have many, many, many layers to the relationship, whether it's the defense partnership, whether it's technology exchanges, whether it's university exchanges, many, many different levels of relations that make Japan-U.S. relations robust, resilient, and able to withstand some of the dynamics that occur between the two states. A good old example of that is how Japan managed the former Trump administration. Relations deepened. They did have challenges in terms of some trade relations, but again, relations deepened, and that was because of the comprehensiveness of the partnership. In contrast, Japan-China relations, unfortunately, have been really much a one-hit band. They've deepened their economic relationships, but they haven't been able to work through some of the real difficult sides of the relationship: security, history, and their mutual threat perceptions.
What should I expect in terms of chip controls?
Yeah.
Obviously, the U.S. has pressured Japan to strengthen their supply chains, but it seems like the country is still a bit hesitant to really expand some of these chip controls. Is that likely to remain the case?
So I think Japan is very much on the same page of the book as the United States in terms of concerns about, the vanguard chips that are being produced by the Taiwanese manufacturing semiconductor company. There's a clear understanding that the PLA, China's People's Liberation Army, is pursuing what they call civil-military fusion, so using all of those technologies that we benefit from to enhance the PLA's capability to be a 21st century modern military fighting force. And with that in mind, they're thinking about reunification of Taiwan. They're thinking about dominating the South China Sea. And they're really thinking about, over the long term, how they can remove the U.S.-led security architecture within the Indo-Pacific and in East Asia. And with that, I think the Japanese and the United States are going to find a way to cooperate on limiting technologies and limiting semiconductors. And don't forget, limiting experts going into China to prevent them from acquiring those top-tier technologies and semiconductors to bolster their AI and quantum computing technologies that will make them an effective and competent competitor to the United States and Japan.
Yeah, I'm glad Yvonne brought up the point of semiconductors, because that's both a political and a commercial consideration, if you think about it, from Japanese corporates, for example. Professor, do you see Japanese chip makers or across the supply chain of chips falling in line easily with what the U.S. wants as far as this conversation goes?
So these conversations started about 4 or 5 years ago, and the Japanese government adopted several supplementary budgets, even at the beginning of the pandemic, to encourage Japanese suppliers to relocate to Japan or start to build different formulas of cooperation. So we've seen the Japanese, the South Koreans, the Netherlands, the United States, and Taiwan start to relocate some of those top-tier semiconductor manufacturing plants. You can find them in Kyushu, at the southern island of Japan, and you can find them in other parts of the world. That's going to continue. And at the same time, we're seeing that Japanese technology manufacturers are finding a way to selectively diversify away from the Chinese market, but still be embedded in those less technological fields. So they're having their cake and eating it too, being part of the market, trying to take advantage of the 400 million middle-class Chinese consumers, but at the same time try to wall off those sensitive areas so those technologies really aren't going into the PLA's military modernization.
Professor, final question for you. You mentioned a couple of minutes back that one of the wobbles between the relationship between the U.S. and Japan during Trump 1.0 was in trade. And if indeed, of course, Donald Trump does take the White House again, it's a big if, he's been talking a lot about tariffs, right? Mostly against China, but he hasn't singled out China only. That might apply to Japanese and Japanese car makers. What is the conversation on the ground amongst corporate Japan? Is there a sense that tariffs are about to go up, and is Japan prepared for tariffs to go up, if indeed that is the case?
So what we saw under the Trump administration is that the Japanese and the Americans came came to an understanding of a mini trade deal. And this was a way of the Japanese to, again, defer to some of Mr. Trump's wishes on trade, open up the market to a certain extent, and relieve some of the pressure that they could have got from the Trump administration. I think they'll take a similar strategy, understanding that, you know, it's not the win that you have, it's the number of wins versus the number of losses. And I think what we'll see is that the Japanese will probably put on the table some kind of they'll accept some of the sanctions and increase in trade tariffs if they can carve out some protection in other industries. I think Japan will also highlight, not only corporate Japan, but Japan in general, that it's the key asset for the United States if it wants to have a successful competition with China. And by penalizing Japan in terms of tariffs, that it will only weaken the United States' ability to outcompete China. And that's going to be the message to a potential President Harris, but it will be the message to a potential President Trump who doesn't like to lose.
Stephen Nagy there, professor at the International Christian University, joining us out of Tokyo this morning. Thank you so much. Coming up next, Israel strikes back at Iran, but its limited attack may open a path for a regional deal. We have details coming up next. This is Bloomberg.
The message here was unmistakable. If you respond, we have now basically made it impossible for you to defend yourself, and we will broaden our target sets. And I think that we'll see how the Iranians absorb and react to the last 48 hours.
That was the former U.S. State Department Middle East analyst Aaron David Miller, who joined us earlier on shows there talking about this attack on Israel and where we go next, really, as far as this potential paths forward are concerned. As far as markets go, they're taking it certainly not just in stride. You look at equity markets, our hot U.S. futures, VIX futures are down. In oil markets, as you can see, this gap lower, certainly indicative of the lack, I guess, in many ways of escalation as far as disruptions to global oil supply is concerned. I guess the question is, do we remain at these levels, though?
Yes, Citi, though, cutting that oil forecast to $60 now.
Wow.
As these Middle East risks fade, they're saying that, you know, unlikely to be seen by the market as leading to an escalation that impacts oil supply. So that seems to be why we're seeing that risk premium being reduced quite substantially this morning. Let's bring in our Asia senior editor, Bill Ferries. Bill, what does this weekend's events tell us? Is this likely the end of the escalation between Iran and Israel?
Well, it was certainly one of the least escalatory actions or retaliations I think Israel could have taken. They did not go after the energy infrastructure. They did not go after nuclear facilities or nuclear research facilities. They hit largely military targets and, you know, air defense systems and missile production facilities. It is certainly the best opportunity we've seen in weeks for a de-escalation cycle between Israel and Iran. Whether that translates more broadly to the conflicts in Gaza and Lebanon remains to be seen. But it is an opportunity, both sides kind of talking down the situation now, both the Iranians and the Israelis. So, but as Aaron David Miller said there in your previous clip, it has left Israel open to the possibility of a broader attack if Iran responds. We just don't see that happening right now.
Okay, so again, we brought this concept up before, the ceasefire.
Yeah, it's, you listen, people who have been betting on a ceasefire the last year have not done well. But again, it is an opportunity. We know there are some ceasefire talks happening in Qatar right now. The Israelis are there. The U.S. CIA director is there. What the proposal on the table is now is from Egyptian President al-Sisi to have just a 2-day ceasefire that would allow the exchange of just a small handful of Israeli prisoners in exchange for getting more aid into Gaza. That's not the broader 6-week or longer truce that we were talking about several months ago that never came to fruition. But it would be a baby step. It would be seen as progress. But even that remains a bit up in the air right now. Both on the Israeli side, there are people pushing against the truce, and on the Hamas side. So you got to have those two sides fully in for it to happen.
Bill, thank you. Bill Ferry's there, our Bloomberg Asia senior editor in Singapore for us. Let's get to some other global headlines that we're tracking today. China has filed its diplomatic complaints with the U.S. and says it reserves the right to retaliate following Washington's latest weapons sales to Taiwan. Now, the U.S. has approved of somewhat $2 billion of military sales to the island. Now, tensions in the Taiwan Strait are elevated after China held military drills around Taiwan earlier this month. Now, Queensland has become Australia's first mainland state to elect a centre-right government in more than 18 months. It's a shift away from the Labour Party's hold in power ahead of national elections due in May, or by May at least. The local media predicts the Liberal National Party, led by Premier-elect David Christofouli, could win a majority in the state parliament. Now, Labour had been in office there since 2015. Plenty more ahead. This is Bloomberg.
Our big take here this morning, a Bloomberg analysis of trade tracking data suggests an Indian pharmaceutical firm is selling top-end Dell servers optimized for AI to Russia. And the servers contain high-end processors made by Nvidia or AMD. Let's bring in our Bloomberg News reporter, Shruti Srivastava, joining us now. So, Shruti, what's been happening and why is it concerning for Western governments?
Thanks for the question. So there is this company called Shreya Life Sciences. It's based in Mumbai. It's a pharmaceutical company and has been in business since 1995. But it also ventured into trading of computer hardware in 2022. Now, the investigation we did finds out that between April and August this year alone, the company has been selling some of the most advanced Dell Technologies servers to Russian companies. Now, these servers, the investigation finds out that these servers have been imported into India from Malaysia. These are some of the most advanced servers which contain processors which are optimized for artificial intelligence by Nvidia. Now, why is this concerning? This is problematic because the servers and the chips that they contain, both of them are on the list of items which have been placed on restrictions by Washington and Europe. And they contain dual-use technology which can go into potential military use. So it is concerning for the Western governments because this clearly shows that they have not been entirely successful in cutting off Moscow's access to dual-use technology which can go potentially into military use.
Okay, that sounds largely problematic if you're sitting in the U.S. and the EU. I'm wondering what they're doing about this and what has been India's response to that, if at all.
You're right. Yes, of course, this is very problematic for the Western governments who have imposed multiple sanctions and have taken all possible, measures to ensure that Russia does not get access to such technology. But it is quite frustrating for the Western governments because India has increasingly emerged as intermediary of choice for such transshipment. Now, we have seen that EU has sanctioned a couple of Indian companies which have indulged in such trade of such restricted items with Russian companies. EU has also noticed that there has been transshipment of such dual-use technology to Russia has ramped up since December last year. As far as the US is concerned, the US has taken up the matter with the Modi government in India, and they have tried and nudged New Delhi to ensure that they act in stopping shipment of such products to Russia. In the recent months, we have also seen that officials from the US and EU have traveled to India to to nudge the government. But we can sense the frustration is increasingly mounting because it seems that New Delhi has not been very warm to the overtures they have made so far.
Shruti, thank you so much. Shruti,
India on its part, of course.
There, out of Delhi for us. Thank you so much. Right, very quickly, the market story today. The Japanese yen, the other word is weaker across your board. There we go. That's it from us here on The China Show. Insight with Haslinda Amin is just ahead.